Hey guys, Mike here. So I appreciate all your comments and everything, especially the questions you put out for today's video as well. You had some very good ones, especially about one very powerful tool which I've tried my best to get better and better at using because it can block a lot of noise out, and I'll show you what I'm talking about. And so I think once you see this, you'll go, oh, I better start learning to use that as well. And there's, easy videos out there I've learned or watched and learned myself how to use it. But hopefully this will help you out. Now, we did have a couple stocks on Friday, obviously helped push the market up once again. Earnings are coming in better than usual. Okay, so don't be surprised by that. So we'll get into all your questions. But first, you can see right here, Netflix, this thing right here just keeps on going, man. Man, look at that. And you might have noticed, big move up, but there's this trend line right here, right? What is that trend line from? That trend line goes all the way back here to the beginning of 2023. Every time it has hit it, it either gets rejected off of it or it kind of just grinds up against it for about a week, maybe 2 weeks, right? And so we'll see if it's finally going to break out of this channel. You can see it's kind of in a clear channel right here, nice little path. And when we put, a fib on this thing, you can see where it can go to. And, it almost made it to the 1.272 fib right there already the other day. So it could just kind of grind up. And normally if you look back when this thing gaps up in earnings or gaps down, it, especially gap up, it normally continues. So just either kind of grind up along that channel or continue to go. So you can see some different levels we could be getting to right there. So that's kind of what I wouldn't be surprised if you see with Netflix. Maybe obviously coming down a little bit to absorb this huge move up. It does not have to come down and close that gap because it didn't on the last two earnings gap ups. And then when you look at Apple here, you go, whoa, well, another big candle. Almost went to all-time highs. Of course, that is a news candle because news came out of China. So you can thank China for that pump. That iPhone sales went up 20%. Like, woohoo, great. And, there's been a lot of worry about this because people are finally starting to figure out with the iPhone that they're basically getting the same iPhone just with a better camera is kind of the big joke. But when you look at Apple, and I know a lot of people are talking like, I don't understand why this thing keeps going up because the metrics on it now are higher than it has ever been, right? It's crazy. And that's what I was saying the other day, like Warren Buffett sold out half his stake a while back. And here this thing's going to all-time highs again, which is kind of nutty. But you can look at this thing, it's only about $1.20, I think, from the all-time high just set the other day for a quick minute there. And so, we'll see if they wedge this thing sideways over the next week or two or continue to grind it higher. And a lot of people I talk to that, they love Apple, but they're like, I don't understand. This makes no sense to me. Because when you look at the growth and everything from earnings and the great thing, they hadn't really hit a home run since the iPhone, really, when you think about it. Because the Vision goggles were a flop, and maybe it's the iPad Mini coming out. Maybe that's gonna be the next big thing or whatever. But looking at it, nobody can really figure out why they keep pushing this up like they do instead of like Microsoft or some of these others. Nvidia, you get right, but when you look at this, 241.72. Right, that's the next fib level. It decides to break above right there. But hey, if you know, let us know in the comments what you think is going on with that one. And so now that leads us into your questions. The first one comes from John, talking about this very powerful tool I was talking about. He says, Mike, really appreciate all the time and effort you put into your videos. For all those trying to call you out, maybe they don't understand or know how Fibonacci numbers work, maybe offer up a video for anyone wanting to learn how to read/predict using it. A refresher is good for everyone once in a while. Appreciate that, John. And we go into fib levels here. I'm not going to obviously sit here and do a course on fibs because I've put these in mini charts. And if you don't know, just Google it, please, about why these numbers are so big and everything. But I'm just going to go over a few charts, then we'll run a video on kind of showing you how it went Friday because you can use these for anything, right? And when you look at this on here, you see certain numbers, right? So we got what I use, and some people use different ones, but it goes from 0 to 1, depending on which way you're pulling it up or down, right? If you're looking for retracement or you're looking for extension, okay? And usually the one you're looking at the most people are going to be 0.50, the golden pocket, which is 0.618 to 0.65, and 0.79, really the big ones, what most people are looking at for extension or retracement, okay? And so when you look in here, I'm looking for a high to a low, right? So I've drawn it from its all-time high to where this low was in 2020 as Disney, of course, was crashing down. I just want you to look at the fibs as it's coming down. It's like tree branches, right? It bounces off the 2.36, finally it breaks through, comes down, gets a bounce off the 0.5, comes back up, rejects off 0.382, comes down right here, ends up bouncing off the golden pocket, getting rejected at 0.5, comes down here, gets right below the 0.79, bounces, rejects off the golden pocket again, and then you see it kind of just shading around so it finally hits 1 right here, which is down there at that bottom. bounces right there, gets rejected hard off the golden pocket, comes down, can't hold 0.79, and now here we are. But you can see on the way down, it's just either bouncing or getting rejected off these levels, right? You go into Nike, same thing. If you look at this right here, it comes down, ends up getting a bounce off 0.5, gets rejected at 0.382, comes down to the golden pocket, gets bounced, gets rejected at 0.5, bounces off the golden pocket again, gets rejected at 0.5 again, comes down to 0.79 to the penny, bounces, comes back up, ends up holding support at 0.6, the golden pocket, excuse me, gets back through the 0.50 level, rejects at 0.382, bounces at 0.5, rejects at 0.382, ends up bouncing at the golden pocket once again, and then comes down. You can see what it's done from there, bounces at 0.79 again, comes up, gets rejected at 0.50 again. And some people call this the 50 Fibonacci and all this stuff. I just go with the 0.5s of what's on the thing. And then you come down, and that's where we're at right here, okay? So you can kind of see what I'm talking about. I say these levels are hard, and you're just drawing from a high to a low, low to a high. That's what you're trying to find, okay? Here's Nike on a weekly, so you can use this for swings, you can use it for long-term investing, you can use it for day trading, which I'll get into in a minute. And since we just went with the crash down, here is an extension up on Nike, right? So we draw the extension from that low to that high right there. And what happens is, again, we start with 0, it comes up, ends up getting rejected off the 0.5 or 50 Fibonacci level, comes back down, ends up bouncing off what, the 0.236, I believe that is, ends up getting rejected at the golden pocket, ends up bouncing at 0.382, ends up rejecting at 0.50, and that's where we stand, okay? Now, how do I use it as a day trade? As I put in one of the members we were talking about this, I said this is one of the cleanest charts I've seen in a long time, because you have more than just fibs, right? So I drew this from the high, I think it was the prior day high, and then this low right here. And when you look at this, there's levels and then there's fibs, okay? So as this came up overnight, by the way, you can see it gets rejected at 0.236, ends up bouncing off midnight and prior day's low. Again, these levels are very important. If you trade, you understand what I'm talking about. If you don't, you have no clue. Again, bounces off 0.236, ends up coming above and then bouncing off new day opening gap. Really is what that's supposed to be. That's when the futures open at 6 o'clock. Ends up coming up, finding support at 0.382, gets rejected at 0.5, gets rejected at 0.5 again, comes down to 0.382, ends up bouncing at 0.5 once again, and then it was in the golden pocket by the time before the market even opened, okay? And so, you can see, hopefully, by this point in time, you're going, wow, these levels are pretty powerful. And now in this one, this is straight up day trading, right? It's a 3-minute chart. I'm just going from that low to that high, right? And we'll come to right here. And then what I'm going to do is I'm going to do the replay on this thing for you so you can just see it yourself and how this works. I don't care if you swing trade, day trade, long-term investing, it doesn't matter, right? Fibs are fibs, and some people are magic with these things. I'm not one of those people. I'm just showing you the basic of fib levels. Some people even use other fib levels. All right, so if I pull this thing back, you're going to clearly watch how powerful the fib levels are, not just from where you see them, but I'll extend them out to the right side. I'm doing this on purpose. So you get to see for the whole day, basically, or whenever this cut off. And so if we end up, bringing this back right here, it's a nice little feature in Trading View, so you can see how the day went if you ever want to replay your day. And then we'll hit 3x. This will be pretty fast. And you can kind of see right here as we play through this, you can see these fibs getting hit, right? I can tell you right now, it's the golden pocket got rejected, golden pocket got rejected again, but it's finding support at the other fib levels. And there's other levels in here, like prior days low, prior days high, and all that fun stuff. See, that's rejecting at 0.79, then it gets up to that high, rejects right there, comes back down, finds support at the golden pocket, and then we go up to 1.272 level, right? That was, I think, the high for the day right there. I don't think we got back above that. But we're finding, and again, when I extend this over, you'll see what I'm talking about as far as finding support at these previous fib levels and stuff. And so when I come back over here, I'm going to extend this out right here just to show what I'm talking about, right? Especially you see that really fast move down right there. See where it found support at? That right there is the golden pocket. Boom. As soon as it hit it, took off. Every time it hit the golden pocket on Friday, it just took off, right? And you don't have to have big moves when you're trading futures and things like that at all. Or even if you're trading zero DTE, if they move that fast, you're doing good. But you can clearly see these fib levels act as support and resistance as it goes. And there's a whole, just Google fib levels. What are they? Mathematicians came up with this stuff. It's kind of crazy. But, I think hopefully just those few charts showed you. And again, whether you're talking about weekly charts, daily charts, really doesn't matter, right? That's what you're looking at. And then like we showed you with Taiwan Semiconductors, what was it, Thursday's video? When I drew it out on Wednesday, I said, well, if it does good earnings, this is where it could hit. and then it hit exactly and then got rejected. Okay, I mean, and again, you'll have more than just fib. You got to have trend lines. You want that for confirmation. You're gonna have certain levels in there, all kinds of stuff. But you know, they are very powerful things. I didn't start using them until probably 2 years ago when somebody turned me on to them. Again, I know people, they use them in different ways, and it's like magic. Honestly, I can't figure out how they do it. But boy, they pinpoint some levels like you wouldn't believe. I mean, it's crazy. So hopefully that helps. The only way to learn it is just to play around with it. It's a tool in TradingView and many other kind of trading platforms. Just play around with it, you know, and figure it out. Watch some YouTube videos. That's what I did, and you'll figure it out. Seriously. Next one here says, can you do a piece on HIMS? I can talk about this stock. I've talked about this stock before many times in our videos and stuff. And you can see, obviously, it's kind of like a meme stock in a way. I don't mean it's actually a meme stock, but it moves like a meme stock. It has very big moves when it does move, okay? And I said probably 2 months ago, maybe what it was, I said once QQQ bottom and starts to turn, this thing's going to rip, right? And this is TQQQ. But you can see why. They line up together. I showed in that video they line up together. In this video I'm showing they line up together. And so again, TQQQ is way up, and so is HIMS. And this one, if you don't know, which I'll show you in a minute, it got its love because it came up with some diet drug or something. And of course, diet drugs are all the fat and everything. So of course, HIMS gets the benefit of that one. Well, when you look at the chart right here, I always say, you know, keep the chart simple because it broke out of that trend line. You know, where's your next level to go? 24, 29, I believe that is right there. And then right here is all-time highs at 25.73. So not too far away. I believe that's 17% total move. If it starts to move up, as you can see, I mean, it doesn't move up in a straight line, right? And so it's not that kind of stock usually, but you know, I'd love to see it come down, retest that trend line. And again, there's this trend line here. You can see that 3 touches now on this thing where it's bounced off of it. So I expect to come down at some point in time and test that trend line. Again, they don't have earnings until coming up. I believe it's like 2 or 3 weeks out. Let me see right here at the bottom. It's going to be November 4th. So yeah, what is that, like 16, 17 days out? So a little over 2 weeks before they end up doing it. But that, you know, when I look at the chart, that's what I'm seeing right there. Obviously in an uptrend for now. And again, this is how they got, you know, known or whatever, really started to take off. This is right here. Their stock has been surging because the FDA is considered allowing compounding versions of popular weight loss drugs, which could significantly increase demand for HIMS similar offerings. And so that's the deal with HIMS. I'm sure they have much more. I don't delve into the company. I'm just looking at the chart and everything. And so let me know in the comments if you got anything you want to add to that. But there are some pretty big price targets on this one. Now, next one says, hey, Mike, my major concern as an investor is the growing U.S. debt, increased interest rate, and geopolitical issues, all leading to a potential liquidity crisis. China, a major holder of U.S. treasuries, could slow down their consumption, and there's a real potential for treasury saturation from buyers as there is so much of it continually being distributed. Any insight to this, much appreciated. You know, look, all that could be true, but in the long run, yes. Is it going to happen at some point in time? I'm sure it will. But remember this, as somebody said, I didn't coin this phrase, they said America is the cleanest turd in the toilet at this point in time. And I don't mean the country, I mean like our debt situation. We all know, I mean, the debt is unbelievable. And not even, it's not the total, it's how the rate of how much they're increasing the U.S. debt all the time. We just went through a huge spike. I don't know if you saw the U.S. debt like Friday or whatever when they updated it. Huge spike in it. And again, it ain't gonna matter. I'm gonna show you another chart that shows you it don't matter who's elected. Don't matter. Like they all spend like it's going out of style, okay? And they have to. I've showed that many times where America has to continue to pile on the debt in order to keep the stock market going up, to keep the bond market solvent, it basically keep the world going at this point in time is what it comes down to, right? And as long as it's about China, yeah, they may stop buying as much bonds, they may sell out of treasuries, all that fun stuff. But remember, who was the number one buyer of bonds and treasuries for almost a decade? It was us. It was the Fed, right? And so when you look at this, remember, liquidity is king. And right now, what are all the central banks doing? They're cutting rates, baby. They're cutting rates, which what's that do? That makes liquidity even easier to get. And here's like this global liquidity index. You don't follow it perfectly, but right now it's been in an uptrend and it makes sense, right? Because our market's been going up since 2023, and if liquidity goes up, the market will continue to go up. It'll have pullbacks, may even have a crash here or there, whatever, but it continues to go up. And now all of a sudden, you're seeing this faucet come back on. And what's the other thing you see? You're seeing our government spend like crazy. I mean, the deficits over the last probably 14 years now have been insane. And who's to say this? Let's say China cuts back. The Fed's going to know that, right? Let's say other countries want to cut back. That's fine. Well, look, here's the Fed right here. They're rolling off the balance sheet, but what they do? they cut it by 50% at one point in time. At some point in time, they're going to stop doing this. And I don't think it's that far off. And all they got to do is say, you know what? We'll start buying bonds again. We'll start buying treasuries, no problem. We'll start buying mortgage-backed securities. What the heck? Right? Because they never get down to the prior level. You notice that? Never got any close to it. They're not going to get close to that level, and they sure didn't get close to it here. And why I'm telling you, it don't matter who's president. Look, this is Democrats and Republicans, baby. This is actually takes us only through 2023, but it was a beautiful chart, and you can visually see what I'm talking about on this one much easier. And when you see, believe it or not, coming through up to 2000, we actually at one point in time had a surplus. I mean, we actually balanced budgets back here going from the 80s into the 90s. And then all of a sudden, 2000 hit. It's not George W.'s fault, right? It's not Democrat or Republican thing. Look at this. You see the angle trajectory. Look at that. And even before 2020, look, Trump, Republicans, whoever's in charge, still spending. Don't matter. All of them do it. They just spend on different things. Some like to, spend more on defense. Some like to spend more on healthcare. Whatever it is, they just spend. If you're old enough, I can remember this. I'm old enough. When's the last time you have heard a presidential candidate, a successful one that's actually maybe got a chance to get elected, talking about balancing the budget? Not decreasing spending, actually balancing the budget. I think it was 2002 maybe. Somewhere in that realm we might have heard it. 2002, 2003 maybe. That's it. The last time they balanced the budget was 1999, folks. Right? They can't balance the budget. I've showed you chart after chart, right? You see the stock market doing this. Why? And if the stock market was doing this, and all of a sudden start doing this. Why? Because all of a sudden you saw the Fed's balance sheet balloon. You saw the U.S. debt balloon. And so they can't balance the budget anymore. It would it'd be like a Great Depression, honestly. It would crash the world if America ever did that again, because you literally were sitting at, what is the deficit right now? I think it's 1.9 trillion, maybe $2 trillion. That means we're spending $2 trillion more every year than we're taking in. Okay? Can you imagine if they tried to balance the budget? Whoo! Nope. Remember, you're talking about a country who literally has contracts, automatic contracts with defense contractors to buy weapons to replace weapons we've never used. Okay, remember, we supply the world with weapons and stuff. Woo, great. And people don't seem to have a problem with that. I have no idea why. What a waste of money that is. But, but they want to cut other things. I mean, it's amazing to me how this works. Anyway, I can stay on my soapbox for an hour on that. But, and the last one here comes from Dr. Marcus, and he says, you mentioned those leverage stocks in the previous videos, such as MBDL, CONL, etc. Is there a way to track or measure the decay? Because these decay over time, stuff like that, kind of like you do with options. And I looked all over the place. I don't see a calculator for it. So if you happen to know a way, there is a calculation. I just, I don't see it out there. And so if you happen to know an easy way to track the decay and everything, I just know for me, it's very simple. I'm not going to hold them for long term, right? And so it's just not how I'm going to do it. And if I see an uptrend coming, that's when I get into them. If I think it's going to be a downtrend, like a major moving average gets broke, channel gets broke, whatever it is, then, I'm going to be at them. But if you can happen to put in the comments how you track it, or if you know the formula, an easy way to find the formula, because I think each one of them has their own little formula. It has to be different because each one of them are different. We would definitely appreciate it. So anyway, guys, I appreciate the questions. Keep them coming. Keep the comments coming. Feel free to participate in any of those questions and add to it. Always enjoy reading them and everything. And tomorrow we'll set up for the week. It'll be another big week of earnings. A little bit of red folder news, not too much though. But again, here we are grinding higher once again as of yesterday. So we'll see how this last week goes. Remember, as we get close to the election, you should see volatility spike according to history. We'll see if that plays out. Right now, seasonality has been absolute junk. So we'll see if it comes back and plays out. So anyway, have a good one, guys, and I'll see you tomorrow.